In today's video, we're going to analyze whether a strategy can work across multiple time frames. There's many people claiming that they've got systems that work on all time frames and on all instruments. Now, that couldn't be further from the truth. We're going to use a very simple example, a crossover and a cross-under of two moving averages, one for long and one for short without any stop losses. We're going to use Dow Jones as an example. As you can see, this is, for example, a short trade, a successful one, and this would be a long successful trade. But as you can clearly see, there's multiple crossovers and cross-unders which would result in losses. As I've said before, there's no stop loss to the strategy, and it's not something that I would advise anyone to trade. It's just for educational purposes. Looking at the results on 5 minutes, we've got 20,000 trades in 5 years, which is a lot of spreads and commissions to be paid. The annual return is minus 19%. It's lost money in 3 out of 5 years. And it's had a reasonable standard deviation. So standard deviation, for those of you that don't know, is a measure of risk. So close to 25%. This could be acceptable for some people, but considering the amount of trades, that's a lot of money to be paid in rollovers and commissions. Moving on to the 15 minutes, naturally we're going to have fewer trades. So as you can imagine, it's probably 3 times less, which is more or less there. But here we've got the change in the annual return, so it's lost less money, but the standard deviations increased. So basically, you had a more volatile instrument you were trading, ignoring obviously the cost and the fact that it's lost money, and still it lost money in 3 out of 5 years. At some point, you would even be in a maximum drawdown of 400%. Which is obviously something that you don't want. The maximum drawdown is the difference between the highest peak and the lowest value of your equity. Moving on to the 60 minutes, we see we've got 4 times fewer trades than on 15, which is totally reasonable considering the time frame is 4 times greater. In this case, the percentage of winning trades has increased to almost 28%. And the annual return is 25%, which looks promising. But again, if we look at the standard deviation, which is the measure of risk, we see it's close to 80%. So if you think about it, if you've got an 80% risk annualized, then this is within 1 standard deviation. In 2 standard deviations, this is going to be probably 160. And again, this one's lost money 2 years out of 5. So again, not impressive. Obviously, if I was to cherry pick the results, I would just show you the 2020 results and I would say, oh, this strategy works on an hour, but it clearly doesn't. Looking at 4 hours, as we can expect, we're going to have even fewer trades, which in essence is not a bad thing because we have less commissions and spreads to pay. But still, if we look at the maximum drawdown, it is 95.8%, which means that at some point in time, we could even lose everything that we've got in our account. The annual return in this case is 20%, and the standard deviation is similar to the 60 minutes one. Again, this one lost money in 3 out of 5 years. And again, if I was to sell you a system, I would just say, oh, look, the strategy's made 124% this year. And obviously, if you were to use leverage on that one, that would pretty much double or triple with the factor that you're going to leverage up with. So you need to be really, really careful with the systems that you trade, and don't believe that you can move from one time frame to another. Most of the times you'll say something like, I'm going to look at 4 hours and then find my entry point on 1 hour. But the same system doesn't work the same across multiple time frames. And that's what you need to keep in mind. So if you've got a strategy Naturally, the most logical thing to do is to trade it on a higher time frame rather than 5 minutes or 1 minute even, and especially when you're doing trend following, and just use stop losses. This strategy doesn't have any stop loss in it, so the results will definitely be better once we add a stop loss. But the point of the video is just to show the predictive capabilities of a very trivial strategy. If you've got any other strategies that you like us to test, or even variations of these ones, we're more than happy to create a video with the results. So give us a thumbs up and leave your comments below.